right, everybody. Happy freaking Tuesday. How you doing out there? Hope everybody's having a good day out there. This is our quick stock market update show that we do called The Closing Beat, reference to our name, Jazz Wealth. I wear the shirt every day, so you guys will check us out at Jazz Wealth. I do appreciate everybody that's giving us a shot. We're a small company. We are SEC registered, so we are playing in the same level as the big boys, but we are a small company. And so if you have an IRA, Roth IRA, retirement account, or you just want to invest for the long term, I hope you'll check us out and see why we think we're a little bit better. We do manage our own portfolio, so instead of just buying mutual funds, we actually control the investments here, and you can see those on our website if you'd like to take a look there. We're also playing a game. It's called Guess the Dow. Go to jazzwealth.com. Tell me where you think the Dow is going to close next week. If you are the closest without going over, you will earn a much-deserved $100 gift card, or if you're one of our customers, we'll send you, we'll give you a $100 credit to your account. And friendly tip there, you always want to choose the Roth IRA if you can. That's a tax-free account. If we credit your Roth IRA $100, you owe no tax in that at all. It doesn't affect your contributions in any way. Our class on Thursday is going to be on some common mistakes I see people making with Nest Egg, which, by the way, we're about to change that. So if you've been thinking about opening an account and you're really interested in Nest Egg, we're about to make it where new accounts have to have at least $25,000 to have Nest Egg or participate in that. So you might want to check that out before that changes. We're going to start that in April. Our Jazz Artist of the Week is Snarky Puppy. Really cool band, amazing, talented individuals there. They did a collaboration with Jacob Collier. If you've never heard of Jacob Collier, musical genius. He's like, I don't know, he's got to be like 25 years old, if that. Just incredible. The way he harmonizes is incredible. Anyways, they did a song called Don't You Know? So you might want to check that out if you're looking for some music, interesting music to listen to for the day. Hey, quick shout out here to Mark, and sort of a joke. Mark sent me in a letter here. He sent me some Mexican pesos. His sister kicked in some money as well. We're going to put this on our wall of dough. If you don't know, we're collecting money to build a wall of dough from around the world. Just small denominations. Don't send anything expensive. I'm not allowed to accept that. But I found it funny. I was reading the note, and he said he included a Chinese yuan in there. Yeah, there it is. And as soon as he said, I'm reading the thing, I'm like, oh, that's nice. And he goes, I included a Chinese note, and I went like that. He goes, don't worry, I got it 4 years ago, so there's no virus attached to the notes there. But thank you, Mark, for sending that in. I appreciate that. That'll go on the wall of dough. Hey, let's talk about the stock market today. 1,100 points in the Dow if you're looking off to the right-hand side of your screen. 135 points on the S&P and 393 on the NASDAQ. Didn't look so good, though, until the end of the day. But for now, the bull market remains intact. Remember from yesterday's class, I said if we close under yesterday's low, and that still remains the case, if we close under yesterday's low, then technically that is the end of this 9-year bull market. And so they came in strong, right? We talked about this yesterday. We either marked a low yesterday or we are going to end the bull market. It was just that cut and dry. I mean, we were that close. So we ended up doing just like we did back November, December of 2018, where we hit the plus 20% to the downside or more than 20% to the downside, but we actually finished above that. So the bull market remains intact. I'll tell you, it wasn't looking good though. For most of the day, it looked like a real iffy type rally. We'll go over the stats. Remember, the stats that we talked about came out just perfectly there. But we started off about 1,000 points higher in the Dow. This is the S&P. We'll flip over to the Dow. Started off over about 1,000 points higher. We actually gave all of that back and turned negative on the day before this afternoon rally in there. We were up last night as the White House, well, not up awake, but like the markets were up last night as the White House said, we're working on some very substantial stimulus. They actually said very dramatic stimulus is what they're working on. But with no economic news out today to really focus on, everybody just focused on, hey, what's that mean? How do we know it's going to be any good? We don't know what's going on. And so the markets were pretty wild for most part of the day there. The official press conference comes out at 5:30. They're going to wait until we're done with the closing beat, so you won't miss anything. And then the White House will start their press conference with President Trump talking about it. There is a rumor that the stimulus that they're talking about is to cut the payroll tax to zero for both the employee and the employer for the remainder of the year. And I got to tell you, if they do that, I'm hiring 2 people right away. So if the White House is watching, I know you're waiting for us to finish the closing beat, but if you're watching, that's perfect for me, right? I think that's perfect for a lot of employers. But if they do cut that for the remainder of the year, there will be 2 new faces here at Jazz because that's a huge savings, by the way. If you happen to know, 6.2 for that the employee pays 6.2 that the employer pays. That's a huge difference. Now, here's what they're trying to do. So the Fed actually studied this years back. What happens is when there are payroll tax cuts, the people that tend to respond to that, unfortunately, are at the lower end of the income spectrum. So those people that have low incomes, as defined, by the low income range there by the Fed, those are the people that go out and spend more. When they find they've got a little more money in their paycheck, they tend to spend more. That's actually good. That's what we want. Obviously, the economy wants people spending money. I don't know if that's a good thing for them, but they want people spending money. The problem is if the economy is really getting softer and the demand is just not there, that means people are going to start laying off, right? That means less jobs. And if those are always the people to go first, the lower income people, in terms of how economic cycles go. So the problem is a payroll tax cut may not be perceived as really great for the stock market in the long term, because if the economy is really getting weaker, those people will have more money in their paycheck for a little bit, and then they get fired, then they have no job. Well, everybody that's in the middle to upper income range, they're not the spenders, right? When they make more money, they tend to save more money. So we'll see. I think they're going to have to do some more there. I'm not sure the Dems are going to be on board with doing anything to help President Trump, but we'll see what happens. We're going to find out here shortly. All right, in terms of the stock market today, the NASDAQ outperformed the S&P 500. That was your better gainer, erasing half of all of yesterday's losses, back above the 200-day moving average. The Russell 2000 was the weak spot. It did add 2%, but that continues to be the weaker area of the market. Your small caps, they tend to do that. When there's a hint of the economy slowing down, who suffers first? The U.S.-based companies, your small cap companies. Seems like it's coming back. There we go. Just a little blip in the system there. Sorry about that. So small caps tend to adjust first to the downside. The good news is if you're invested in small caps, they tend to reverse course first when the economy strengthens. Why? Because they're quicker. They're smaller companies. They're more nimble. They're better able and equipped to make decisions to go hire a bunch of people, whereas like an IBM or something, it's this long drawn out process. So anyways, that's the reason your small caps are underperforming there. Sector-wise today, we'll go through all the sectors, or we'll go through some of the sectors, but it really was just sort of a blah day until about 2 o'clock today when the market, about 2:30, when the markets really woke up and started heading back for highs there. Now, we are currently in a correction, right? That's a loss of 10% off of the highs, but no more than 20%. We talked about this yesterday. The average correction since 1990 lasts 83 days with an average decline of 19%. So we're above that right now in terms of the losses, but we are only 18 days now into this correction. Really, really short correction, the fastest on record, by the way. So that's what you have there. This is the 14th day, by the way, that the S&P has moved within a 1% range. It's had a 1% or greater range for the day. I want to point something out here, the stats that I shared with you yesterday, because the stock market responded exactly as it's supposed to. I'm not a magical person here. I point these stats out because the market knows the stats, and I just share them with you. The algorithms know the stats. I just share them with you. What did we talk about yesterday? Yesterday, the stock market gapped down 5%, meaning it closed on Friday, whatever price, and it just started 5% lower yesterday. That's called a gap. Anytime the stock market gaps down 5% or more on a Monday, we went over these stats yesterday, 100% of the time the market is higher the very next day. It's known as Turnaround Tuesday. So we talked about that yesterday, that 100% of the time, the odds are 100% that we were going to have a rally today, so we shared that with you. The average gain, 4.2%. Why is that important? Why is that so interesting, and how do we know that the markets actually know these stats as well? If we go over and look at today's performance, I put a line on the chart to show you exactly where 4.2% from the day was on the chart. Where'd we finish? Basically right there, 4.2%. That tells you that the markets, the algorithms, they all know what's going on. They know when there's an average day. They know when it's outside the norm in terms of performance. So just really incredible there. The smallest gain on a Turnaround Tuesday, 2.28%. Biggest gain, 5.42%. So we finished basically right at average for the day. So really, really cool if you follow along with those stats. Again, I just like to share them with you. I'm not like claiming to be a mad scientist or anything. Just put them out there for you. Let's take a look. In the Dow today, you got financials did well. JP Morgan, one of the better performers, 7.77% higher on the day. And then you had your tech, really Apple up 7% on the day. Microsoft, really a broad rally overall, as you're going to hear me say probably numerous times, but about 7% in terms of Microsoft's gain on the day. Weakness on the day, even though it finished positive, Boeing on the weaker end of things, up 1.69%. That all came at the end of the day. It was down for the most part of the day there. Remember the news yesterday that the FAA, the report, right, the rumor, the Wall Street Journal said that the FAA is going to make them fix the wiring issues before they get the 737 MAX back up in the air. Today also happened to be the anniversary of the Ethiopian crash. I believe it was the Ethiopian crash. So that was in the news there. They also got a downgrade from 300 to 282, so not good for them for today. It should have been a better day for them. Verizon was also on the lower end of the list. It did add 1.25% on the day, but this is looked at as like a stable dividend type stock. So when things get a little bit crazy, people run to a stock like this. It just recovered a little bit today, but since everything else was really strong, you saw money going elsewhere for the moment. On the S&P 500, your strong stocks for the day is going to be airlines and oil. Oil got a recovery on the day, and airlines got a nice boost, which much needed boost, by the way. Had some comments out of President Trump that they were going to do whatever it took to keep the airlines running, and obviously helping them out with some of their what they call them, slot fees and things like that at the different airlines. Because right now, some of these airlines, believe it or not, they're flying empty planes because they don't want to give up the slot fees at some of the busier airports. So they're literally just flying empty planes so that they don't have to give that up, which is obviously not worthwhile. American Airlines up 15% on the day. On the oil space, yeah, Marathon Petroleum now was up 21%. Looks like a lot. Remember, this one lost 50% yesterday, so it's all in perspective. 20% on Hess. And then you had MGM also did well, 16%, one of the better performers in the S&P. On the downside, you had basically biotech, 3% to the downside for Quest Diagnostics. Gilead, which they're working on the virus drug there, down 1% on the day. And then biotech-related Laboratory Core was down 3% on the day as well. Let's go through the individual sectors today. We'll talk about oil to start and go with the energy space. Oil recovering 12% from yesterday's record decline. It's a start. Obviously oversold in the short term there. We've got a price war with Saudi Arabia against Russia and Russia against the U.S., so somebody's going to have to do something there. Oil explorers, they got a nice bounce, 21% on the day. Keep in mind, these were absolutely punished yesterday, so this is not like amazing, just, oh, wow, 21%. Just recovering from some of yesterday. Oil services, I noticed, kind of hung out, didn't do a whole lot today. You had Schlumberger and Halliburton, which basically make up the main performers of the oil services stocks. They did well on the day, but you've got a lot of weakness in there in the sector, and you now have over half of the holdings in the OIH trading under $5. That's not a good sign. There's a lot of them actually around the $1 to $2 range. So looking pretty weak there. Let's go over to tech real quick. Tech, 6.67% gain on the day, back to the top of the downtrend there. And I'm going to put that here because that's going to be a focus area. We just kind of draw out this uptrend, rough lines here. We're back to the bottom of the uptrend is how you would say it there. So tech, you had a broad rally there. Adobe sticks out. If you happen to have some Adobe today, you have one of the outperformers in the space, 8.7%. I thought PayPal stuck out a little bit as well, another 8% back to the 200-day moving average. And in the semiconductor space, Texas Instruments adding 6.7% on the day. Take a look at transports, added 5.5% on the day. That's going to be airlines, right? Railroads did okay too. Kansas City Southern was higher on the day, 4%, but mostly your airlines. Your United Airlines, JetBlue was just on CNBC a minute ago saying they're not asking for any government help or anything. 8% gain on the day there. Alaska Airlines as well, they did okay, 8% on the day. Looking good there. Going over to bonds. So bonds finally pulled back a little bit, meaning rates actually ticked higher. That's a good thing. That I got a lot of people to think that maybe this isn't going to be out of control, and they moved some money back into the overall stock market there. However, we have a Fed rate meeting coming up next week. We now have the Fed Fund futures market is pricing in a 60% chance. That doesn't mean it's guaranteed, but a 60% chance that the Fed actually cuts rates to zero. Would be zero by a quarter, but essentially zero by next week. That's impressive right there. I think the Fed should probably stand back and say, hey, Washington, y'all need to chip in too. Do what you guys got to do. We're doing what we got to do here. Quit picking on us, and Washington needs to act, right? Washington never likes to do the tax cuts and things like that, although they claim that they do. Historically, they don't like to do that. But we'll find out next week. So right now, you've got bonds at least taking a little bit of a break here. But overall, looking rough. You got financials higher on the day, 5%. Regional banks higher on the day, 7%, with the rates coming back, with rates going back up again, with prices falling and rates coming back down. They have just been pummeled, really. Price of gold pulled back a little bit today. Not a big deal. If you own gold, you're like, still in an uptrend, not a big deal. Little pullback I can handle. Overall strength is good. Still got about a 6% gain since last Monday. So looking pretty good over there in the price of gold. And then this is not fair. Let's check this out. Here's China. China is now officially positive since the start of this coronavirus thing. They haven't suffered at all. Is that fair? And in fact, if we look at it here, they're now positive year to date. To put that in perspective, the S&P is down 10% year to date, and China started this whole thing, man. Come on. It's like starting a fight in grade school and then the other guy gets blamed for it. It's just not fair. Anyways, so we've got China up by 4% on the day. Looking good. All right, not much to say there. All right, an individual stock news, Occidental Petroleum. So they cut their dividend. They did it. I remember we talked about this when oil started getting weak. You're going to see the oil production companies say, okay, we're going to have to scale back. We're going to have to spend less overall. So CapEx spending is a fancy way of saying that. They did reduce their CapEx. They did reduce their dividend, by the way. This is the first of what will be many that will be doing this, by the way. If you're in the oil space, you've really, really got to look at these individual companies and make sure that they have plenty of cash to continue to spend and grow like they want, but also to pay the dividend. If that answer is a no, then you're likely to see the dividend get cut there. Booking Holdings, you can imagine they've going to struggle a little bit. People not booking as many flights and stuff. They just got rid of their guidance. They said, we're not even going to guide going forward. We have no idea. We see a lot of weakness here. There is weakness as far as the virus and everything's concerned. So not good for them. The stock did finish up 2% on the day. You had earnings from Dick's Sporting Goods. So although it didn't finish at its highs, it added 4% on the day. They beat by 16 cents. They raised their guidance going forward. Revenues were good. And guidance is the key. For any earnings that are left over, which is mostly retail stocks at this point, guidance is the key because we all want to know, how do you think you're going to do going forward? And when a company raises guidance into this mess that we're currently living with, that's a good sign. Vail Resorts lower on the day, 2.25%. They've got a lot of issues there overall. They missed on earnings by 40 cents. That's not a small miss. That's a big miss for them. They're expecting 544. We got 504, so a big miss there. They're seeing weakness in travel. This is the ski resorts thing going on there. Also, they've got some lawsuit issues with their 401k, so that's not good either. I have a client that works for them. Stitch Fix down 25%, hitting new 52-week lows. They did beat on earnings. They did lower their guidance going forward. They are not immune to the weakness that's out there. So they were pretty weak on the day. Well, very weak on the day. 5.5% of the S&P 500 is above the 50-day moving average. That's the blue line on my charts there. That's one stock more than we had yesterday. We were at 5% yesterday, 5.5 today, one extra stock. That shows how bad yesterday was, right? Today we recover half of all of one day's losses and still can't get any decent amount of stocks back above their 50-day. So you got real weakness there. You had three new 52-week highs today. It's going to be Clorox, Dollar General, and WEC Energy Group. A good mix of stocks there, but not a lot to choose from. And you had 99 new 52-week lows. Our record is 230, which happened yesterday, as you might imagine. If we look through some of the 52-week lows, if you like looking for these discounts here, TripAdvisor stands out as one of the weaker ones there that didn't come off its lows. Kohl's didn't come off its lows either, the department store. You had Macy's, and sticking with retail also. These sort of second-tier retailers didn't do well. Caterpillar hit new lows, but did close. I mean, it added 2% on the day, so not bad there. Boeing, we already mentioned, hitting new 52-week lows as well. Stocks that stayed near, or stocks that came well off of their lows after hitting 52-week lows. You got Carnival Cruise Lines looking good there. Royal Caribbean Cruise Lines, another 7%, way oversold. Yeah, stock lost over 50% of its value. In the oil space, Helmerich Payne did good there. You got Disney coming off lows as well, an immediate reversal and erased all of yesterday's losses, by the way. That gets an extra point. So if you're looking for stocks and you go, I'm trying to find discounted stocks, but I want some sign of strength. Like I want some sign of knowing that I'm not the only one buying that stock. If you find a stock like Disney, I'm not suggesting it, but if you find a stock that erased all of yesterday, that's your first clue that more people are interested in that stock than maybe others. So there you go. Oh, also you had IBM almost erasing all of yesterday, but added 6% there. So, I feel like I said a lot today. All right, that's basically what I have for you. The key today is the stats don't lie, man. You got to follow those stats. You got to be in tune with that. That is just so cool to see that. I love seeing that. I share as much of that as I can with you. We've got dividends coming out. Ex-dividend day for Home Depot, right? Home Depot, yeah, Pool Corp as well. Who else is in the mix there? Why is this list a little off? Medical Properties, that's a REIT there too. They're paying out 27 cents. Pool Corp's paying out 50 cents. Home Depot paying out $1.50 if that helps you. A little bit of adjustments going on in the S&P 600. Nothing too crazy there at the moment. And if you're watching us on YouTube, we'll take a chance here to try to answer some of your questions if you have any. Yeah, let's do it. Occidental Petroleum, there was a lot of the oil stocks were halted between yesterday, that action that happened yesterday. A lot of them. Yep. Based on those stats, we got Tuesday rally. What's the Wednesday look like? Not good. I assume today was just a recovery. It's a 50-50 shot that tomorrow will be positive, hence why I only focused on today. You know, sort of just want to show the good to you. But that's that. 6 months out, by the way. I'll share that with our customers this weekend in our Notes from Jazz email. 6 months out looks good, right? So whenever you have a 5% gap down, the next day looks good. It gets a bit of a kind of a choppy mess for a while, but 6 months out, the stats turn good there as well. Remember when you used to do the stats for consecutive days with less than 1%? Yeah. That's why I'm keeping track of those with more than 1%, because it's just the opposite end of the spectrum. What'd we go, 74 days on that? I don't think we're going to go 74 days greater than 1% movement, but we'll see what happens. Tandra, I got your drop there. You're playing the oversold bounce now. Boy, you're active. I like it, man. Tandra was hoping for the markets to fall and was as patient as can be. Got to give you credit there. Finally got it. Now you're looking at the other side. That's cool. All right, be selective. Yep. When will the stock market stabilize? The sad thing is, I don't know that we crunch back down into the type of movement that we saw prior to this virus issue. Remember, before the virus, we had an average absolute daily percent change of 0.4%, meaning any day before the virus that you wanted to bet on how much the market would move, if someone would make that bet with you, if you said plus or minus 0.4%, meaning either down 0.4% or up 0.4% or anything in between, if you'd have guessed that, you'd have been right more times than not. We're sitting at 3.5% now, right? So I don't think that we crunch back down to the 0.4% because it's election season or election year, right? So we're going to get into that. We haven't even touched some of the election stuff going on right now, although most people believe it's Biden and Trump are going to go at it, and that's whatever it is. But we still have election season, and volatility does pick up. I shared that in a class with customers to show volatility increasing during election season. And so because of that, if this virus turns out to be maybe a little blessing in terms of people holding on to money and then they go out and spend it when they feel the coast is clear, well, we have election season right behind us. So that's going to get exciting too. Remember, when the election comes around, in terms of the media and what the candidates say, they're going to say things are looking rough and they're going to fix it, right? So it always makes you feel like things are worse off than you really are. And you got to imagine the Democrats are just loading up their ammunition for what's recently happened in the market. So they're going to paint a pretty ugly picture going forward, but we'll see what happens. Yep. We'll see. Yeah, airlines did well today. Everything across the board. A lot of capacity cuts there if you read into the individual airlines, which they have to do. I mean, that's what they're going to do. So all in all, yeah, a little oversold bounce today. Not too bad. Yep. There you go. I love it. Yeah, I mean, that's a good. The question is, what happened to the trade war? Well, phase 1, right? That's done, although nobody's making good on that. What happened to phase 2? Are we just saying we're going to just give you guys a break for now? Should we be talking about that? We'll see what happens. Do the research on trader volume done by computer algorithms trading, percentage volume done by human investors. I'm not sure how I'd get that data. I know how I can get some of it, but it wouldn't be a whole. I'd have to break it down by individual symbol or ETF. That may be a possibility. Yeah. It just wouldn't be as broad as some of the other stats that we have. What are we hoping that Trump says in 6 minutes? I'm hoping the payroll tax cut. Yeah, bring it, right? I don't see how Democrats want to fight back on this, right? And how you paint a picture, and now remember, when it comes to your dough, I don't take sides, I don't care, politics, all that great stuff. That's a really good idea. Cut the payroll tax for the rest of the year. It's our money anyways, right? Cut the payroll tax for the rest of the year. I'll hire 2 people right away. I promise you. I'll put them on the video and everything. But I don't know how the Democrats fight back on that. I know they don't want to do anything positive right now because they want to get the credit. And I don't know, if I was on that side, I guess I'd do the same. But you can't, I mean, you can't just stand back and not do anything here. They've got to do something. Yeah, we covered Royal Caribbean. Good bounce today. I would expect that you're starting to put in a bottom in that area right around there. I would continue to say that you don't have to be a hero and try to go all in at one spot. This is a market that you scale in, whether you're scaling into mutual funds, index funds, and you're a passive investor, or you're looking for individual stocks and building a portfolio. This is not one where you have to guess the bottom and start to buy. I shared a chart with customers to show how this type of drop doesn't lead to a perfect recovery and then you miss it. There will be lots of back and forth. Don't you guys worry about it. I love it. What asset classes perform the better under lower interest rates? Yeah, you're going to be your REITs, your utilities, consumer staples. Those would be the top 3, almost perfectly in that order. I'd probably say utilities beats REITs, even though the REITs have had a great run recently. Yep. We'll see what happens. In the meantime, I'm going to get out of the way and let the White House take over. They promised they'd start when I was done. You like that joke? I keep using it. It's good, like we're somebody. Anyways, hey, enjoy the rest of your day. I appreciate you stopping by. If I helped you in some way, hit the subscribe button. That really helps us out. I do appreciate that. And we'll be back tomorrow to do this all over again. Let's cheer for that payroll tax cut. I'm all on board. Let's do it. Come on. Trump, Pelosi, all of you, let's go.
Hey, wait! Before you go watch one of our other great videos, have you had a chance to see our new Fin Tips videos? They focus on one topic at a time, covering investing, personal finance, and anything that can quickly help you with your dough. Best of all, we'll keep it real short, because we know time is money.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.